The digital payments landscape is undergoing a massive, quiet revolution, and right at the center of this storm sits a household name that the market has treated like a relic of the past. For the last few years, the financial headlines have written off PayPal as one of yesterday's news, pointing to rising competition from Apple Pay, Block, and Google Pay, and many others. But the Q1 2026 earnings report released, and it sends a clear, undeniable message to Wall Street. The pioneer of digital checkout is not technically rolling over. In fact, under the disciplined execution of its turnaround strategy, PayPal is proving that its massive network of over 400 million active accounts is an incredibly cash-rich, resilient moat. Today, we are breaking down the numbers, the strategic pivots, and why the remainder of 2026 could see a violent, upward repricing of this deeply undervalued giant. Hey there, my name is Anthony, and welcome to Growing Your Wealth. Okay, let's jump in and analyze the Q1 2026 earnings report for PayPal. And Q2 is about to come out, so just hang with me, okay? And we're gonna begin this video with the bullish outlook. The headline numbers will show that PayPal is quietly performing much better than the market gives it credit for. TPV, or total payment volume, grew by a healthy 9% year over year, driven by resilient consumer spending and the continued expansion of Braintree. That's their unbranded processing platform. Net revenue came in at a strong $8.2 billion, beating analyst expectations. But the most significant victory in this report lies in their transaction margins. For quarters, the bear case was that PayPal's high margin branded checkout button was dying, while their lower margin unbranded Braintree processing was doing all the heavy lifting. In Q1 2026, we saw those transaction margins finally stabilize and begin to tick upward. This is a direct result of management's hyper-focus on pricing discipline, cutting unprofitable accounts and rolling out Fastlane. That's their new one-click, guest checkout tool that is dramatically increasing conversion rates for merchants. Furthermore, the bullish thesis is backed by a fortress of cash flow. PayPal generated over $1.6 billion in free cash flow this quarter alone. Because the business, it's a mature and it doesn't, require intensive capital expenditures. Management is utilizing almost all of this cash for a massive, and I mean massive, aggressive share buyback program. In Q1 2026, they, reduced their outstanding share count significantly, continuing a trend that has retired over 10% of the company's stock in recent years. As a shareholder, this means your slice of the PayPal profit pie is expanding rapidly without you spending an extra dollar. When you combine an historically low valuation with the stock trading at a forward PE of just, maybe 7, 8, maybe it'll jump a little bit, but that's, 7 or 8 times forward earnings with an aggressive buyback and stabilizing margins, you have a cold spring ready to snap back. Just know that, just be ready for that. However, okay, so there's something I need to talk to you about. When I made this video 2 or 3 days later, guess what? Stripe, an event, they came out with the buyout, stuff, $53 billion talk. It is what it is. Is it good? Is it bad? Well, it's kind of got mixed emotions, but I think it's good. I'm okay with the buyout, but if the price is right. So what we need to understand here now is that this $53 billion buyout is the absolute, it's the floor. Okay, this is the floor for where the stock price should go. And if Enrique Lores is going to do his job, he's going to get the best bidder and the best buyers and have a bunch of companies, fight for it. And it's going to be double that. That's just my honest opinion. $53 billion is an absolute lowball. I'm okay with it because the stock price has already appreciated so much. I mean, heck, what are we talking about? It's $45, a share before, and now, as we're recording this second part of this video, it's 56. So I had to cut in, I had to talk about this because I didn't have this in the video that you're watching right now. So I had to break in and talk about this. And these are important caveats. Why I think this is a low ball, this is the floor. and why I'm still bullish on my position. Because the video is talking about how I believe that, you know, there is going to be share price appreciation. Did I think it was going to happen this way, this soon, you know, 2 or 3 days after I actually filmed this video? Absolutely not. It just played out that way. So what do I think about this going forward? Well, I'm going to be listening very intently on the earnings call on Tuesday, July 28th. And I'm going to be listening for, you know, key things. What are we talking about? You know, none of this is actually, nothing that I've seen is confirmed. I mean, it probably is confirmed, but nothing's absolutely confirmed from what I can find out. But
welcome back. PayPal shares are soaring on a takeover report by Stripe, along with PE firm Advent International. Mackenzie Sagalos has more in today's Tech Check. And Mac, I guess some shareholders are worried that Stripe and the private equity firm get all the upside and they're going to be left with just, what was it, $60 a share, something like that.
$60.50. And that is a question going into that shareholder meeting that is apparently, or the board meeting rather, that's apparently coming up on the 20th. Very curious timing there. But what we know now, Kelly, is that sources are telling CNBC that the offer values PayPal at more than $53 billion. As of Tuesday's close, that represented a 28% premium, but that gap is narrowing this morning, with shares surging as much as 20%. Our David Faber reporting that Stripe, Advent, and Jack Dorsey's Block would contribute $17 billion in equity, with roughly $50 billion in committed bank financing backing the bid. The plan here is to take PayPal private, with Stripe and Advent then holding equal stakes rather than folding the company directly into Stripe. Now, PayPal has not responded to that offer and officially has no comment on the report. There's also no certainty that a deal gets done, but sources familiar with the matter tell CNBC that the board could meet as soon as July 20th, as we were talking about, to discuss this bid. Now, an early pioneer in the payment space, PayPal has struggled to revive growth, issued disappointing profit guidance this year, and recently replaced CEO Alex Chriss with former HP chief Enrique Lores in an effort to reset the company's trajectory, with the bet here really being that Stripe and Advent can run this business more effectively, better monetize Venmo's roughly 90 million users, and revive a widely recognized brand whose stock is more than 80% below its former highs.
You know, the earnings call will kind of give us a better understanding on what we're looking at going forward. So how do I feel about this? Well, I mean, the company is buying $1.5 billion back every quarter. I mean, you know, if let's just say the last quarter, Q2, okay? Let's say the average price was $45 a share, okay? And they bought $1.5 billion worth of those shares back. That's 33,000? Is that 33,000? 33,000 shares, okay? That's just crushing the share count. So whenever they talk about $53 billion, well, nothing's set in stone. They're continuously buying, using their free cash flow to buy back their shares. They're going to bring in competition. Other companies are going to bid, and fight. And like I said, if Enrique Lores does his fiduciary duty, he's not going to sell the company for 9 times of their earnings. It's just not going to happen. 20 times? Okay, now we're in different territory. We're talking about a different thing. So right now, this company is a hold for me. I'm not actively purchasing any more shares of PayPal. I did all my purchasing whenever, you know, it got down to 38, 42, 45. You know, when I was buying it back in 2022, 2023, I built out a substantial position. I like my position, and I believe it's going to continue to go up from here. But if you're looking to take a position, just listen to the call. I don't know when you're going to watch this video, but listen to the call. You need to really dive in, listen to what management is saying, and determine, you know, your risk tolerance. Understand where you want to be if this is a good fit for your portfolio. Don't panic. I still believe there's a lot of share price appreciation coming. So hang in there. If any new news comes out, you know, gosh, I guess I can make another video to talk about it, because this seems like a hot topic right now. But I don't believe this is the end. The stock price is going to fluctuate, but I believe it's up from here. So watch the rest of the video. There's a lot of good key points in there for why I think that there is going to be bullish sentiment. There is going to be share price share price appreciation going forward. And if you got any questions, comments, whatever, talk to me, let me know. And that's it. Okay, get back to the video. See ya. A balanced steward must also look at the bearish arguments, and there are legitimate concerns in this 10Q that we must monitor closely. The first major bear point is the stagnation of active user accounts. PayPal's total active account was flat to slightly down compared to last year. While management argues that they are intentionally flushing out low-value inactive users to focus on, highly active, profitable accounts, a flat user base makes the market nervous. Wall Street wants to see user growth, and until that metric turns positive, the stock may face valuation ceiling. This may be the top. We don't know. Secondly, the competitive pressures from Apple Pay and Google Pay, they remain intense, especially in mobile web browsers. Every time a consumer uses Apple Pay instead of the PayPal button, PayPal loses a high margin transaction. And finally, we must watch Venmo's monetization. While Venmo is incredibly popular with younger demographics, the Gen Zers, millennials, its contribution to the bottom line is still relatively small compared to its massive volume. If management cannot successfully monetize Venmo through credit cards and pay with Venmo features, a huge piece of PayPal's future growth story may remain locked. Despite these headwinds, the potential for significant stock price appreciation throughout the remainder of 2026 is it incredibly high? I don't know. I believe there's a strong catalyst for it. And the catalyst for this rebound is fundamental market rotation. The stock market has spent the last year chasing one sector, AI. And if you know anything about the market, they like rotating money around, on the snap of a finger. Also, as those valuations reach their limits in the AI sector, smart money has already started to look for highly profitable, cash-generating businesses that have been completely ignored. PayPal fits this description perfectly. As the Fastlane product continues to gain adoption among, major e-commerce platforms like Shopify and BigCommerce throughout the rest of the year, transaction margin expansion will become undeniable. When the market realizes that PayPal is not a dying business, but a highly efficient, high-margin cash machine that is, growing its earnings per share by double digits through massive buybacks, the stock will re-rate. A return to a very modest 15 times forward earnings would represent a 30 to 40% upside from current prices by the end of 2026 alone. Okay, so as you analyze PayPal and look at your own portfolio, remember that true investing requires patience, discipline, and the willingness to buy what is out of favor. In the stock market, the crowd is often wrong because they focus on temporary struggles rather than long-term value. We are called to manage our resources with a long-term vision, looking for solid foundations that can weather the storms of competition and economic change. Don't get me wrong, okay? I could be totally off basis with PayPal. I have been invested in the company for a while, and every time I've expected the stock to do one thing, Wall Street they pulled the rug from under me. I'm honestly at a loss for words with this one because I'm viewing things differently. I'm going to stay deep into the research and really try to understand where Enrique Lores is, trying to take this business. I mean, honestly, the margin of safety is evident with the share buybacks and a dividend payout. I feel secure right now with my investment. Okay, I just believe that there will be one last hoorah, a jolt that nobody sees and will send the stock price running and investors trying to catch up. I want to leave you with a powerful biblical scripture that perfectly aligns with the patience and discipline required for value investing. In the book of Ecclesiastes 7:8, it says, "Better is the end of a thing than its beginning, and the patient in spirit is better than the proud in spirit." The market is currently being proud in spirit, chasing the flashy, high-flying stocks of today. But the patient investor who does the homework, understands the cash flow, and waits for the turnaround will see that the end of this turnaround story is far better than its turbulent beginning. So let me speculate on what the stock price can do if money begins to rotate. The way I'm speculating, okay? Depending on what the Q2 earnings look like for PayPal, and honestly, I wouldn't have a problem with a depressed stock price, so more buybacks can possibly occur. I believe that the price can jump, around the $40 to $60 range. But if there is rotation in money and investors begin to believe the high-flying chip stocks are reaching a peak, value investors could step in and push the price up higher. With the history of how PayPal stock has been over the last 4 to 5 years, I don't fully expect that. But if numbers are way better than the market anticipates, this stock could it could fly. So let me be conservative, as I view PayPal as a dividend, purely a value dividend play. Okay, let's just put a 10 times forward multiple on it, which is above where it's at now. And over the next 12 months, I believe this stock could be around $55 range, okay? And honestly, I'm okay with that. Just remember, with PayPal buying back $1.5 billion in shares every single quarter on average, it may be even higher than that. I try not to expect too much from PayPal, but believe one day, they can have their comeback. All right, that is it. Tell me your thoughts. Tell me your thoughts in the comments below. This isn't a high-flying growth stock that I typically like to invest in, but being diversified with a value dividend stock is the responsible thing to have in a mature portfolio. Just remember, be diligent, okay? Be a diligent student of the data. If you want to see a high-flying speculative growth stock that has the potential to blow the socks off of Wall Street, click right here. Hyliion is a company that is looking to take power generation to the next level. As always, happy investing, and may God truly bless each and every one of you.